I'm not breaking, right? Okay. I'm not breaking. Okay. All right. Say, you say Monday is a long time ago. Okay. Say be accountable, being able to tell how your week went and how to do better the next week. Okay, so the basis of Friday, or why Friday is one of the most significant, day in your trading journey, is just that a lot of people are consumed by the emotions of result and no result. They don't understand that next week is already, for next week to happen, it first have to pass. Okay, for next week to happen, it first have to align with the past. So next week is the future shows up from your past. Okay, so let me for some of you, this may be your first time. For some of you, you may be new to this. Okay, but I want to ask us a question. From your own understanding, between the present, the past, and the future, which comes first? Everyone in the chat, challenge yourself. If you don't get exposed, you don't learn. Okay. So let me remove the present, okay? Because the present is continuum. It's never past, it's never future. Okay. Between the future and the past, which come first? At least that could make it easier. There are certain things you will know in your life. You'll be different. Okay. There are certain things you cannot learn if you do not know some certain things, some certain essential things. So between the past and the future, to your understanding and your uh paradigmic view, which comes first? Which happens first? Okay, so I go past, 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 past. Okay, good. Okay, good. All right, beautiful. I like the fact that every one of you answer. Is there anyone who did answer? If you see, let me tell you, warning. If you are in my class, three things: be present, be accountable, and communicate. If you're not communicating, you're going into my blacklist. All right. If you don't know, say I don't know. Don't stay silent. It's an exercise. We're in a class. Okay. Between the future and the past, which comes first from your paradigmic view, from your point of view, from your knowledge, which comes first? Okay. So beautiful. So every one of you pick the past. All right. So get something powerful today. You are not wrong, but from a perspective, you are not right. So someone copy and paste, just do a little exercise. Copy and paste the meaning of future and type it on the chat. Just do it quickly. So it doesn't look as if I'm the one showing you. You know, a lot of people do not have the right concept or knowledge. They have the classroom knowledge of what future is, but they don't know the meaning of a future. So pick your dictionary or pick your phone, all right? And help me with the chart here, what the meaning is. Good. Okay. So depending on the dictionary you're using, all right, good. Like I said, you're right. But if you look at the Oxford Dictionary, okay, so there cannot be, so there are many dictionaries now that are carrying the perspective of what has been taught to us to be the future, okay, which is one of, if you look at the one China posted right now, there are now dictionaries that are evolving and, okay, that are carrying that narrative. But if you go deep into time, the future is the moment. It's a period of time, the moment after speaking and writing. I just need you to sink down. You can see that these two meanings are like what is yet to come. If you say in the future is what is yet to come, and what I just said right now, there is a conflict of understanding. Okay, because we are sold the idea that the future, okay, is what's going to happen. Okay, but it's actually a moment after speaking and writing. All right, now why am I bringing this to you? The future happens to reflect the past. If you look at the essence of creation, okay, you think before you speak, and it is when you speak that it is heard. Am I correct? You think before you speak, and when you speak that it is heard, that is heard. So between voice and thought, which comes first? That gives you a clear explanation between the past and the future. The future is the thought, the past is the voice. Which comes first? Your thought comes first. Why is this so important for someone who's in process of growth? All right. You understand that what will happen tomorrow happened already. It's just manifesting on the physical space. That is why I always say you will manifest your result. You don't see your result. You see who you are from your result. You are first before you manifest your result. Am I correct? So everything you are looking at the past was first a future. Do you know why these people say the future? No one is certain about the future because the past lies to them. It's a man is conditioned by what they see, what they experience. That's why you see the word seeing is believing. We are conditioned by what we experience. Okay. That is why we buy into the uncertainty. The truth is, the future actually, in all essence and the principles of life and creation, the future actually happens before the past. But because we do not see and experience it first, okay, we tend to lay more emotions on the past. Okay, so the reason I brought the consciousness of word, before you are going to become anything, it will come if you first be it. All right, and being it is not a physical thing. It's a thinking thing. It's an imagining. It's something you imagine. It's something you believe. It's something you speak. Then you go work it out. That thing you did is the future. Your belief system is the future of you. All right. So you see that future from your past. So every time I look at my past, I see my future self. So what I am doing today is reflecting my future. So I can work out the future that I've created from modifying my past and learning from my past. Am I making sense? So every time you observe your past, it's a window into your future. Because why? Your future first happens to reflect your past. So why am I saying this in respect to trading? If you want to work at your trading, you don't experience it, you build it. And the only way to know what to build are the materials that are given to you. So your results are materials given to you to work your what you want to manifest. So tomorrow will be a manifestation of what you did with yesterday. Are you guys getting it now? So this week has happened already. Do you want next week to still happen? Or you want to build next week with this week? So you look at every trade, you look at every execution, you look at your strategy, but most importantly, you look at your decisions that bettered all these things. Did they align? Then before you now check the result. It's not the result that matters. You made a decision on Monday. You told yourself this was what you were going to do in trading. Or you were instructed that this is what you should do. Now, when you look at all of the activities of your trading, you told yourself you're going to watch 3 videos in the course of this week. Can you go back on your word and say, oh, I made this decision, did I do it? All right. You said you were going to only use 2%. Can you check every of your day and you use 2%? Okay. You said you were only going to take this account for this strategy. Did you do everything you said? If you can look back at your decision for learning and you see that it aligned through the week, you'll be a better person next week. It's impossible for you not to be a better person that is making better decisions next week. But you know why a lot of people can't have a better next week? Because they think next week will happen. They don't know they have to create it. So I'm very intentional. That's why, you know why I'm excited? When you guys came on, I was excited because I got into a better version, consolidated version. I trained you guys. I exposed you guys this week to new levels of insight and knowledge about mindset, philosophy from last week. All right. I've been intentional about, so I've been digging deep, exposing. And guess what? It has reflected in our market insight. What was the result last week? We had 100% last week exposure. Okay. If we look at this week, I'm going to look at every trade right now. You find out that the decision to stick to a strategy and understand position played out this week. Extremely true or true. It means they reinforce. So I didn't just call trades. I told you, like I went deep in allowing you guys understand market structure, allowing you guys understand the reason I picked my trades. And guess what? I did it at a very, very, like when I say the frequency I used to dish that knowledge, I believe you guys caught it. And it played out in all of our trades. And guess what? The market told us you got it right. And one of the things you realize, many of you, your confidence, if you paid attention to details, your confidence in the market, no, not in the market, your confidence in the decision of the market would have improved from last week and this week. True or true? Magdalene, where is okay, Yankee? Yankee, you are Cabane, right? Your confidence has grown more, right? Not because of the result, because of your intention to learn more about what gives you result. When you do it and you figure it out and the result shows up, it reinforces your confidence. At least I helped you guys achieve that this week, right? Am I correct? Understanding price action. From that little training I gave you guys yesterday, did you see how it is important to know a strategy is important, but understanding the concept of a strategy and how it can be used and understanding decision. That trading is about decision. You don't know what the market is going to do, but if you have a result of what you have done over a period of time, you can choose a decision perfectly. All right. So it's been a great week. I'm just going to review the week, then give you a bit of a concept as to why we made some of the decisions. Now, in that, we're going to learn a couple of things. For some of you who are just experiential, which is one of the things I'm teaching you not to do, don't be an experiential trader. Exposure is key, but out of your exposure, have an intention to understand. When you understand, practice. Practice leads to mastery when it is built on understanding. Don't just try to, oh, I want to experience a strategy. Then I'll start trading strategy to get a result. That is gambling. Many of you are mixed up in gambling, okay? And you are shadowing, your mindset have covered the concept of gambling with the fact that you are in an environment, they are telling you what to do, you have a strategy, you are learning, you have lied to yourself. You are actually in a casino. All right. And you are lying to yourself, you are in a trading environment, but you are in a casino. You're not doing the right thing. Okay. And I'm trying to help you. I'm trying to help you. So let's check. How many of you made money yesterday? Okay, how many of you didn't make money yesterday? So let's look at this first. Okay. Let's look at this first. So this is price action on S&P 500. Many of you don't pay attention to my price action trades. Okay. But it's a window. Price action, the reason I pay attention to price action is a window to market position. Okay. Market structure on the long term. So when I tell you this place is in a feed of sell, it reinforces my decision to do my snipe, because when I know the position, I told the S&P 500 this week. Okay, so last week we attended this somewhere early. We attended this. It didn't actually fill up this area. I think the market is still going to come to this area, or if it's not, okay, if this is 60%. So I'm training at the same time. I want you guys to know something. Okay, this is already past 60%. So there is every possibility that this is going to drive low. Okay, because it's already past 50 and 60%. It respected 60, but short, which means there is a high probability that this market is going to go into discount. All right, and may come to this level. So that's why when the market was here, I told you guys, yes, I think this was somewhere around Monday. I told you this market is back into our sell range and it was consolidating. If it breaks this, it's going to sell. And that's what we've been experiencing since it's selling. Because why? It's in a sell range and it's in a downtrend. This market gives me a very beautiful concept. Market-wise, if Monday opens or next week opens, I know how to buy this market from what it has done already. I just need a market structure shift on a 1 hour or 4 hour. It's going to get into constructive buys. That is one of the things market understanding of price action from structure perspective gives to you. Okay, it puts you into direction. So I do know one thing right now. If this market hits, even if it doesn't come here, okay, if this is the bedrock right now and start rejecting, I just know when market breaks this level, then we've changed character. Okay, it's going to get back into the bullish state. Then I'm going to buy. All right, that is when this market gets into the buy volume. Anything before that right now, Any buy before that right now, it's going to be a little bit on the risky side. Because why? The volume is dangerously very, very, bearish. Okay. So when I do price action, don't say, oh, I'm not a price action trader. I have a price action account. I have it because I practice the perspective of price action, but I use it to reinforce my strategy. Understand price action. Where is the market? I want you guys to notice something. All right. Like I said, I'm training, but I'm also doing market review. You're going to find out that the markets that are trending in the direction of your snipe move faster and stronger than the ones that are not. Have you realized that? Okay. If you notice, the one that has conflicts more are the ones that's why I added change of character. Because change of character now gives you, yes, it's opposing the trend, but it has done something market structure shift. But the trades that normally hits most of the time, okay, are the trade that are against the volume. It's like a river, you're swimming against a river. Even if you have good swimming skills and you know a path to just take, but the river is still against you. You can change that. But when the river is for you and you swim with the river, guess what happens? It goes fast. It goes. Now, this is the irony of it. I can't tell you to only take trades in a direction because why? You smash one-to-one. But if you want to smash real volume length, okay, it's always against the trend when it starts against the trend. So it's a what I'll call it, an ideal exposure to know how to go against the trend, because the true people that make money in this market are not the ones that flow with the sharks. They are the ones that understand when the sharks bends. That's skill. That's skill. That skill is what you should learn. Okay. Don't just be a slave. Be the one to understand, all right, how to be rebellious a bit, but with concept. So that's why they say do not trade against the trend, because the trend is your friend until it bends. You see that until it bends, that's where your money is. All right, that's where your money is. If you can understand how it bends, that structure, okay, and that is one of the things I'm always exposing you to. Know how the market shifts direction and know when volume comes in. So next week, I'm going to give you guys, if I'm permitted, I'm going to give you guys, I know I've taught you guys market structure shift, but understanding at what point has the volume consolidated the shift. Again, it's going to be based on market structure. If I have, maybe I'll do that training. All right, next week. Okay, so I'll go back into the chat now. So now that I know that this is selling, okay, today we might have a sell. It's already selling today. We may see what that looks. So we go back into, this is one of the things I want you guys to know. So this was our sell day before yesterday. Why am I looking at it? Okay, this is good. Sorry, S&P 500. Okay, this smash, this was our sell yesterday. This was our daily low. Okay, now the next daily low is here. The reason I'm not going to sell this market today, not that it won't sell. Who can tell me why I would not like to sell this market today? Type it on the chat. I think the market already, what's the time? Okay, it's about to. Okay, so if you're going to snipe, it's going to snipe here. It's going to snipe below this candle, and the risk is going to be here. And the reward is here. So you already know why I won't sell this market today, right? Okay, good. This is the most powerful thing about your trading decision, your risk. It's not the opportunity. There's an opportunity for a sell. It's selling right now, okay? But if you look at what you see, do not be willing to gain what you cannot afford to lose. That is a strong risk. That's a strong, reasonable factor for your risk. When you're looking at your equity and you see how much you want to, don't look at what you want to gain first. Look at what am I going to risk for what I want to gain. Then you check that with your risk management. All right, does that fall into the 1% or 0.5% of your risk management today? If it doesn't, avoid it. The more you avoid it, the more you strengthen your discipline, resolve. But the more you give in because, oh, I will make money today, and you do not consider how much you are risking, your exposure, your risk exposure, you are a gambler, you are in a casino, and your money will finish. All right, it will finish. No matter how much you make, you lose it. When there is no structured risk, everyone who has done it has lost it. Okay. That's something you have to condition yourself. It's hard, but just condition yourself. You forget the rush of the fear of missing out. Every time you reinforce, oh, this is a good trade, but the risk is not good. All right, let me wait on the buy side. So at what point am I going to buy this market? Very, very important. That's why I told you this is your buy point. Market changes character here because it broke structure here. So you see that we're not going to have a trade, probably have a trade today, except there's so much volume that will push the market on the buy side. So this makes me rest today. I'll put an alarm here and I'll go to sleep. If it breaks, now, I'll tell you this. If market just rush and break, I won't trade it as well. Who can tell me why? If it goes straight volume without creating, and you guys, I'm teaching you guys something. It is not in a technical class. If it goes like this and breaks, let's say 1, 2, 3 candle just goes breaks, I won't take the trade. Who can tell me why? No. I don't know what a fake out is, friend. Neither do you. You can only know a fake out when it has happened. So that will not be the reason I will not take it. The risk too high. Thank you, Mr. Giles. Okay? Because if I do this, this will become what? The swing low. If it breaks, I would have to put my risk here. And trust me, that is too dangerous a move, too big a move. Okay? I told you guys, part of, and I need you guys to, if you're paying attention to truly learning the strategy, pay attention to the concept of the strategy and the rules around it. Do not take, if your range candle, which is the what's that word I used? Consideration candle, which is the first 15-minute candle. If it is bigger than 70 pips, don't take that. It makes it dangerous, mostly for the indices. For 50 pips for currency, if that 50 pips is too much. If the first candle is too long, it will make your risk too long. Your risk in every trade in indices or gold shouldn't be more than 150 pips. All right. If it is more than 50 pips, see, understand the concept, the distribution volume. There is expansion, retracement. The retracement will determine continuation. But if market is consolidating, it is expansion, expansion. So you can take a trade because it has not broken out. It will come back, take you out, go back. So there is flop. Market does not move except it is news. Market does not always move straight 150 pips and does not come back. Average 70 to 100 trades, market retraces. So if you're taking 150 pips, you're taking like 2 portion days of expansion. You'll be stuck in a trade. Are you guys with me? When the risk is too much, you stay too much in a trade. And there's risk in staying too much in a trade. Decision for today may not be the one. Decision for this morning, for New York, for London, may change during New York. So if you get into trade, and decision for New York may change during, it may be bullish in New York, but guess what? Decisions will change in Tokyo. So that's why you have to check your risk is very, very powerful. So that is one of the rules. Another is, so that's rules. The first consideration candle shouldn't be long. Then if it is shorter than 5 pips, that makes it invalid. Okay. Consider candles that are short. It's not too good. All right. Should be at least 5 pips old before it's like, don't date a minor. Okay. That's violation. Don't date a minor. Okay. So less than 5 pips is it's a minor. All right. Wait for the next candle. Let the next candle that is be your consideration candle. All right. Then do not okay, I've talked about your risk not more than 150. So if you look at this right now, okay, the reason I don't take the trade, so it's not about my reward. The reason I don't take this right now is because it's really way more than, okay, check this. How many pips is this? All right. This is seven for indices. Okay, hold on. This is about, this is more than 15 pips. Okay. So indices is 100 of Forex. So this is about 74 pips. So if I have to use the 74, then I have to come back to, it shouldn't be more than probably like 30, 35 pips. If your risk, it shouldn't be. Okay. I'll averaging between 50 pips. Okay. If I'm using Forex, always note that. I know I mentioned it. Always note, you can write it down. So anytime you're taking your trade, if the risk you're giving to that trade is way more than 50 pips, it's dangerous. 50 shoe. If 50 is even too much, but really looking at it, because that's 500. All right. So that's why I won't take this trade. Now, if I'm going to take the trade, this is what's going to happen. If it comes back, breaks, that is a risk point. Comes back, breaks, this is a risk point. That will become my risk for the day. All right. It means it went tired at went tired. It means the market is bullish. So I will take the swing low to be my risk point. But if it just goes straight, I won't. Does that make sense? Did you guys learn something from that? All right. Like I said, I am training, but I'm also doing market review because you have to understand these things. They reinforce your decisions in trading. Okay. I don't want you to be a zombie. One thing I don't want you to do in my environment, okay, don't have low self-esteem as a trader. When you do not follow instructions, you will always have low self-esteem. All right. Follow instructions so that you can learn these simple things. So I'm not going to buy. All right. So I'm not going to buy this. We had, how many trades did we have this week? We had all trades, all trade we call on S&P 5. I think S&P 5, I reinforced more of a sell. It's only US 30 we bought at one point in time. Okay. It flashed out, but came back. We bought US 30 yesterday. You know what I told you guys? All right. I know you guys will be like, Henry, how many of you felt like I was a magician yesterday? Okay. You know what happened in was it US 30? Okay, it was US 30. S&P 500. I know Blessed will be like, man, this guy shouldn't go. So look at what happened. I remember one now. And I also told you guys, I think not everyone. The closing should be at least 2 pips. The candle that closed, that snipe, should be at least, it should be up to, how many pips did I say? Let's see. This is short. It's not even up to 1 pips. It should be at least 2 pips. That's a strong closing. This is this sniped, but that's why I told you. And I looked at US 30. It didn't align. Okay, this actually sniped above as well. Okay, but it was not a good snipe because why? It was less than. It should be at least 2 pips. Okay, when the market closes, it should be at least 2 pips. You can write that down. Okay, these are the things that makes you understand. And I also said, okay, the candle must be a bullish candle. Okay, the candle must be what? A bullish candle. Let's see. I want to show you guys something quick. Hold on. Because many people don't understand. Okay, they are not close. I'm trying to find an example. Okay, but this is the explanation. When a candle, so let me just do this quickly. I can't use this. Let me use this. Hold on, so you guys can understand. The color is green. What candle is this? Is it buy or sell candle? The color of the candle is green. The color of the candle is green. What candle is this? It's a sell candle. All right. Bisola said it's a buy candle. Why did you say it's a buy candle? Because I said the color is green, right? This is one of the things you have to understand. There are two parts of every candle. Okay, the wick and the body. If the wick of a bullish candle, of a green candle, all right, if the wick at the top is longer than the body of the candle, that is a sell candle. When the wick is longer than the body, irrespective of the candle, that's a sell candle. It means the market sold more than it bought. And if the sell in a particular candle is more than the buy, that candle is a sell candle. So you have to watch out for every closing. If the wick overpowers the body of a candle, but it's sniped, watch out. That is a sell candle. You wait for the next candle that closes as a bullish candle. Does that make sense? If there is one thing right now that I'm doing on this call, I am adding everything you need to know about consolidating your decision in sniping. Many of you just think if the candle closes above, voila, I jump in. How many of you are learning that right now? Put 100 on the chat. Okay, so the candle has to close bullish. So it has to close bullish, and it has to close at least 2 pips above the first candle for you to have a good snipe. All right. It means it doesn't close like that. It makes the trade invalid, or you wait for the one that now closes. That is why we avoided this trap yesterday. Okay. The closing, and I also talked about the correlation, which you don't need to, but because of my experience, I waited for a correlation and it played out well. It was. And at the same time, I taught you guys price action yesterday. Market tends to break the previous floor. It broke previous floor. What did he do? He retested. And he said, Kabing, that's your strategy. All right. But you were late. But at the point, broke, retested, closed, voila. All right. That's another price action that played out. Okay. So it is very, very important. So we had this yesterday. We also had US 30. Okay. I told you guys, wait for it. It closed and money was made. I said, let it change character. It changed character, consolidated a bit, but eventually it gave in. Very good. It's done 1-to-1 already. So US 30 has actually won. So we had US 30, we had S&P 500 just in one day. Patient pays. We had S&P 500 yesterday. We had US 30. Okay, paid out. All right. S&P 500 did. So anyone who didn't trade. Okay, let me show you what you are missing at. So the entry was here. It came here. That is way over. Hold on. The entry was. Wait, this is S&P 500. What am I? Okay, it only flashed. Why do I? So it flashed 1-to-1. Okay. That is if you use this risk I gave you. I told you if the market comes and goes back, all right? But in this case, it was a little bit tricky. Okay, it was a little bit tricky. But what I actually used in my own was actually this area, all right? I actually took this area because I know I did more than 1-to-1 yesterday, all right? On the trade, I did more than 1-to-1. But this was it. It actually played out yesterday, okay? US 30 played out yesterday. Good, all right? GBP USD played out yesterday. How many? And you guys see, this GBP USD is 9 and played out yesterday. What have I not called? Gold. Just in one day. One day. I called gold. It's 9. Look at what it did. Okay. Gold went as far, but I left here. Okay. 1-to-2. Look at this. 1-to-5. One day. Gold has gotten into a sell range now. Okay, we're going to look at that. All right. Overall, big market. I'm not talking now. So every trade we called yesterday, even BTC, I flashed BTC USD to you guys yesterday. All right. Played out after the break. Played out. It was a beautiful day, right? And I told you guys, one of the other things I told you guys yesterday, you're going to watch out. If you follow the reading, you will make money. I also exposed you guys to the concept of the US dollar. I told you if it is bullish, you go sell. Every other thing we sell when it is bullish. You guys see how this reinforced our decision. All right. This is something that will change your trading if you are now doing your own trading. Your decisions can be backed by certain reinforcement. When the US dollar index is strong, every other pair we sell. That is why gold is selling. All right. But now in this case, something is happening. BTC USD is actually buying, which is a conflict. Something is happening. That's a conflict. It's supposed to sell. Okay. But it actually sold at some point before it bought. All right. If you see gold, gold is selling. If you see stocks, they are selling. If you see futures, they are selling. It's only triangular Bitcoin that is actually, not selling right now because Bitcoin has a different ecosystem. Okay. Slightly from the rest of the pair. But if you can understand this price action, so what he did is liquidated this area. This is market structure. Okay. This is pure bullish market structure. That's why it thrived. Break of structure, change of character. All right. Broke, retested. Look, third wave. That's the moment this happened, I knew I was going. That's why I focus more on the sell trades this week. Okay. The moment I first started selling, buying, I thought the market was going to buy. But on that session I had with you guys, I told you guys if this reject and break, change character, I'm going to start selling. And these are part of the things as a trader you need to have. I know it's a lot difficult when you're hearing these ones like this. It's like it's complex, but no. If I am teaching it, it looks complex. But if you're practicing it, it's simple because why you're only practicing with a pair, with a strategy and a decision. Okay, so it's simple. One of the things that makes practice hard for many traders, I'll tell you, is very simple. Number one is that you're trading multiple pairs in one account. True or true? It's impossible to manage. It's impossible to learn. It's impossible to learn. But when you diversify every of your account to be a learning center, so I have US 30 account for snipe, and I have US 30 account for price action. I can't have a conflict when I say price action trade. I will trade it even if it conflicts the snipe trade. Because why? They are different character. It cannot be overwhelming when the account manages it. So I'm trying to allow this. That's why I always tell you market structure or price action. And I'll tell you snipe. They are different. I don't conflict it. And when I'm buying, so I bought, so guess what? I called good trade for buy, price action. That one hit X. That's the only trade we lost. Price action. Because why? The market gave into US dollar. Okay. But I took my trade. I will not take the trade because snipe is a sell. That's not why I don't. It's not a battle. For every 10 trades I take on price action, I win 7 to 8. So I don't know the two that I will lose. Do you understand? It's the same thing with snipe. Okay, I'm 70% on snipe. I don't know the 30% that I will lose. So I will not use one to disturb the other. Does that make sense? With 100 on the chart. So when I trade that line, I take that. It's not the trade that I want to win. I want to win my character. I want to win my overall. That erases this uncertainty. Will it happen? Should I buy? And just imagine you're trading everything in one account. You are that's man, it's like dating so many men or dating so many women. You will blow your heart. All right. Does that make any question? So US dollar has broken. US dollar is in premium. It has broken this area. All right. I don't know where this guy is going. Let me check. Okay. Wow. Okay. Yeah, we have a limit here. So guess what? When this guy hits this area, I'm going to start buying. I'm going to start buying the other guys. And if you look at this right now, if it comes here, if you go check where Euro USD is going, right? Where is it going? Here. It correlates. It means if market hits here, I'm going to start buying because why? That guy is going to start tanking. Okay. If it doesn't tank here, it's going to come here. Okay. And if we check the dollar index, if it doesn't do here, it's going to come here. Can you guys see the correlation? Just master it. So I know that when this market is here, I would look at start swinging, strong swing, okay? Because this would have been, okay, this is not, if this index is, I'm teaching you guys another thing right now. If this is really moving, okay, at this point, this is going to be a strong rejection. So even if this market struggle to this area right now, get into this area, boom, you can swing and close. I just put some serious lot size, good risk, and go sleep for like 2 months. Okay. This is how we spot trades, swing trades. Okay. When they are at very strong daily discount or monthly discount. Has it been a wonderful session? So we crushed the week. Okay. We crushed the week, not because we were lucky. Was it luck? From what I showed you guys now, do you think it was luck that we had 100% last week? And did you lose any trade? Aside market or snipe, I think all our snipe was, okay, just one US30. Do you think it's luck? It's not luck. Okay? It just shows we know what we're doing. We know how to take away the noise from the real deal. Because there were noise in this week as well. There were so many noise as well. But this week trended more than last 2 weeks. We had lessons last 2 weeks because the market consolidated a lot. But last week trended, this week trended. So that's to tell you another thing. You're better off when the market is trending, like I told you. The strategy is for a trending and expanding market. You will know where you're failing if you study your trades. All right, how you took them, why you took them, you will know. This thing is very, very simple. When we started this strategy, I told you it's one of the most dangerous strategies I've experienced. It's one of the most unique but dangerous strategy in the sense that it's so simple. Okay, but I brought it from the class of simplicity. Have I done that? Even that is still simple, but it was so, at least now I don't feel it's dangerous because why I've given it body. Am I correct? Rather than just waking up in the morning and just waiting for 15-minute candle and just allow the candle to break because it has a 75% win ratio, I just get into the candle, it beat a lot of you. Because why? There's an emotion to get a good result. Many people don't have that emotion. Okay, and there's a risk. So there were 3 things about that snipe that made it beautiful, that made it dangerous. When I said it was dangerous, many people don't understand. It was dangerous because the components to getting the 75% didn't look simple for real. Because why? You'd have to be present in the market to get that ratio. Because when it snipes to one side and fails, it tends to snipe to the other side. But the truth is, me and you, we are not present in the market most of the time to see the other side snipes. All right. And another factor was risk. We may be, if we choose the wrong risk, we still might be in the trade when the other side snipes. And when it snaps, you have to be there to take it. If not, it will just be a record on the chart, but it's not a record on your broker. Am I correct? Am I speaking the truth? Okay. So the record was good, but it can only be when you are fully present in the market. And I realized, yeah, the break even. So the break even was not part of the lessons. For every one of you that were accountable with me, I realized if you had lessons, I knew where the lessons was coming from, is that you were not getting the break evens. The break even was a lesson because you didn't take the other side. So it made it more or less like a 45 to 50% without the break evens. Okay. At some point, then towards the end of the year happened to us at that time as well. That gave me, okay, yeah, we have something to work with. But let's now add the price action or structural feel to trading. Okay. No, Mr. Giles, from the session yet, were you not on the session yesterday? Okay. So this someone else messaged on the group. From the live session yesterday, I told you guys, this is where we're going to buy EU. Didn't I say that? It has to change character before I buy. I marked it. Look at if you go look at my trade, I said this is where I'm going to buy EU. Okay, because why? It's a trend. It has to. It's a deep trend. This is a change of character. Now, someone asks. I think someone asked me, "Isn't this a change of character?" No, they're equal lows. This. If you look at this, right? Yeah, I need you guys to understand something. All right. This also gives you. Is this up to 2 pips? No. All right. When market breaks certain areas, it's not up to 2 pips. This is not even up to. It's one. It's not even up to a pip. Okay. This is all equal. This is an equal low. Okay. This is an equal low. So this is the low that broke this structure. There was no structure before this low. So this is the structure, the last structure that was broken. And the high that broke the structure is the change of character. Okay. If you did this, that is the thing about when you're trying to trade. You do not check. You see what you don't want. You'd affirm things you don't want to affirm if you clearly just come back and look at it. All right. Yes, market is on discount. It's already coming to discount. So if I have to buy, I have to wait for market to what? Change character. And I said it yesterday. Okay, except you missed the session or you missed. And that's why I said, even the sell, I said I wasn't going to sell because it was already close to the that's why I did not I didn't call EU sell because it was already close to the daily low. Okay. The snipe below, this was a snipe below. This kind of snipe. All right. For the continuation, it has to change. Hold on. No. Sorry. This was the snipe below. It was already closed, except it got 1-to-1. But I didn't call it because it was already closed if I took the market. Does that make sense? And another thing I also said, these are part of the tricky things because I remember I mentioned it on EU and GU yesterday. So, Kendry, what do you do? So this is a bullish market. So I said, okay, if I am going, so this is a break of structure. This is a low that created the break of structure. It means this was at the point you take this market when the market breaks up. So this was a snipe, okay? So if between here and here, you got a 1-to-1, that would have been a good trade. Oh, it was. Ironically, it was. So EU did well yesterday, okay, for the snap. But as at the time I was analyzing it, I said, I want to focus more on the buy. So I just did a GU, okay? And I said if it breaks above this, because this is the change of character. And if you look at GU, well, okay, GU was good because GU wasn't even tempting. It had a longer, all right, reward. That's why I focused on GU and it played out well. Okay. If you look at these simple things, it will save your trading. Okay. This simple character will save your trading, because if you check price action, when the market is trending, for you to buy a trend, just wait for it to change character. This was GU as well. This was a break of structure. This high created this low. So I said I was going to wait for this high before I'm going to buy. Okay, there's no way if I buy around that area, market volume would have already changed to the bullish volume. It's going to be significant. It is rare to lose. That is why you see that our win ratio now has increased more than it used to be when we were just taking snipe. True or true? Okay. Now we are more patient. And when character comes in or structure comes in, the win ratio, you take every 10 right now, we're doing 8. Except it's a bad consolidating week. And that is something I want every one of you to experience. All right. Did you get better this week? How many of you, your account increased this week? Let me tell you the only reason why you were not. The buy on GU was price action. Okay. Was not snipe. It was price action. So let's go to price action. GU. It played out. So why did I say we should buy? Okay, because the market broke, retested, and closed. This was a daily. All right, it did it on the 1 hour. So that's why I say we should buy. Okay. So that's it. It broke, retested. That was the buy. And this was the risk. So price action was a buy, just like gold was a buy. Okay. But Snipe was not aligned. Does that make sense? Okay. And that's because of what the US index does. Okay. So how many of you grew? You grew account-wise and you grew knowledge-wise. And you know that your next week is going to be better than this week. Any question? So how many currencies are you trading? Everyone type your chart. Type how many accounts do you have? I have one last thing, very significant thing before we go. How many currencies are you trading and how many accounts are you trading with? Don't go be accountable. This question puts you in a state of accountability. Like type the currencies you're trading and type the account you're using to trade them. Chris, you didn't type how many accounts you're using. Kiki, how long have you been learning? How to K, what and what are you trading? The question is, how many currencies are you trading and how many accounts you're using to trade it? So there's a reason I'm asking. Okay. Okay, GU and okay, EU. That's okay. All right. So ask another question. I'm just gonna confuse it. How many accounts are you leveraging with me? So the question I asked was what you're trading. It means what you're practicing, you're trading by yourself. You're observing, you're trading, you're learning, you're passing by yourself. So how many accounts are you leveraging with me? Do you guys understand? Do better next week. That's why I'm trying to help you guys with what I'm doing right now. Chris, you said 2 and 1 break even. So that makes it 6 accounts. So I'm going into another area that many traders make mistake or they don't really do well. Okay. This is now what we call account management. Many people are not good at account management because they've not made proper decision on how to manage portfolio. The end game of every trader is to be a portfolio manager. All right. So you started 3 accounts. So I'm using the same account. Okay, to improve. Okay, you're just telling me so I asked the question, how many of you have an account and you are leveraging just my trade? Okay. So the first question is, how many accounts are you leveraging your practice? It means you look at the market yourself and you have a currency you trade and you're following the rules of what I've taught you, and you are trading an account for yourself. How many accounts do you have? How many currency are you looking at, and how many accounts do you have for that? So let's go back and answer. Okay, so Chris is, because the reason I'm doing this is simple. In the next 6 months, what you're going to realize is a practice of what you did right over the last 6 months. Many of you, you get into this type of environment and you grow so fast. If you grow so fast, you'll be buried quickly. Stay young. Stay baby. All right? Growth, mastery is not immediate. If it becomes immediate, you will die so quick. And that your debt is your account. All right? So what a lot of traders do is, my strategy is very simple. So they come, they just print the strategy and they go practice. That is what, over the last 20, 30 years, a lot of traders have been doing. And check, say by their fruit, you know that. By their fruit, the fruit of what's been happening in the trading environment, over 90% within the first 6 to 9 months fail. Because why? They're doing the same thing, I'm telling you. They want to master without the proof of concept. There's what we call proof of instruction or proof of concept. Okay. If I'm teaching you something and I'm doing with it you, if you cannot get result with me, why do you think you'll get result with yourself? That's a question. So if you followed me for 3 months, can you say you have gotten result with me, leveraging me? Because part of what will make you a good decider, a good disciplined trader, is if you are disciplined in following. If you cannot follow my instruction, why do you think you will follow your instruction? So one of the ways to reinforce following your instruction is have proof of following my instruction. You build that over a period of 6 months. If it takes you 9 months, if it takes you 1 year, make sure you have a certificate, a certified result of, and guess what? It also reinforces, you're trying to learn from someone. You're not getting the result from the person. You should question yourself. Am I correct? So the first thing you want to do, that's what I do. You know how to trade. Let me see your strategy. If it works, I want to learn it. But first, let me do it with you. If it doesn't work for you, why do I think it will work for me? It's a gamble. That's the truth. So do you guys believe my strategy is working? Put 50 on the chart. Is it working? Is there any hidden, what do they call it? There's this word they use in contracts, hidden something. No, it's not agenda. Clause, something around clause. Is the strategy plain enough when I call the trades? So there's clarity and it's resultful. Now the question is, do you have the result? Is your account growing as we are getting the result? If you're not having that, that's your challenge. That is what you should do. Over the next 2-3 months, promise yourself that, oh, I want to be consistent with leveraging US30, S&P 500, or gold. Pick any currency and say, I want to get this result. So that's a leverage account. Whilst you're practicing your own, you now begin to mirror your result with what you're getting with leverage and what you're getting with yourself. That is how you learn. By the time it comes together, when your leverage is growing according to what is printed and your own strategy is doing the same thing, you're growing. All right, you're growing. That's true growth. It's sustainable and consolidated growth. Many of you are not doing it. You're becoming what we call irresponsible students. All right, I'm using the fair word right now because many of you don't like to hear these things. You're wasting time doing the wrong thing, trying to be right. One of the key things in learning is humility to duplicate instructions. Just because you have access to buy an account doesn't mean you should buy an account and start doing what you have not proven to have learned. It will take time. Let it take the time. Your first priority is to start earning with leverage. I shared that with you guys yesterday. Earn with leverage. Don't rewrite the wheels. Just understand my instructions. Get an account. Look forward to trades that I'll call, any session that I'll hold. When I call the trade, I always share the insight. Understand the insight because I'm big on insight and trade ideas. But the good thing now, if you notice from last week, I'll tell you guys active. When the trade execute, I will say active because I'm training you guys understand the insight now. I'm now making the insight more of a signal now. So everyone who sees, oh, it is active can get in. The risk is already there. The reward is already there 1-to-1. So why not get in? Many of you rather wait for a trade to, buy GBP USD now, entry 1.12345. That you're losing time. Grow up. Okay, grow up. I'm creating a signal service, but my signals are deeper. I want you to own understanding the signal. So if I am not here tomorrow, I would have left you a legacy. You don't have to go search for, because guess what? If you do not get me right and I leave, you go find another person. You will remain slave of getting signals. You never grow. All right. Does that make sense? So if I ask you this question again, how's your leverage account doing? You should know what to tell me. We got 100% last week. Some of you, if you are leveraging me, you should have passed an evaluation last week and this week. Gold clean, S&P 500 clean. And guess what? They're doing 1 to 2. It means you're using 1%. See, it is easy. You just have to. Not every week is as good as what we had last week and this week. But guess what? You're far better, okay, in leverage account than sometimes you do in your own personal account. Okay, am I making sense? All right, Kabin said, please, boss, I want to make a suggestion. It works for me, and I believe it works for some people too. Please, if you could always use a drawing for your explanation, it makes it easier to sink in my opinion. All right, so the two things you said lies in one understanding. To take a trade, what do you need? Everybody type on the chat. To execute a trade, what do you need? 3 things. What is that? Mr. Yankee, what do you need? No. Entry. I'm not talking about strategy. Entering a trade now. If you want to take a trade now, okay, what are the 3 things you need? Entry, take profit, risk. So risk, your entry, your risk, your point of entry, your exit, and your risk. All right. So let me show you this. It's so simple. Some people make it complicated because of their desire, all right, to be lazy. Now watch this. What is this? When you see this, what does this mean? This is the entry. This is the risk. And these are the take profits. This tool confiscates everything about entry, exit, and take profit. So I want to ask, so let me remove this. Between, if this breaks, retest, enter, which do you think sells for a baby trader or for simple understanding, which sells the entry more? This is drawing, and this is parameter. Which sells it more? Between the drawing and the parameter, which sells it more? I'm trying to understand. He said, I know those. He said, okay, I mean the way you explain the risk drawing. So if I give you this, I've given you everything you need for the trade. The only thing you just have to understand, how do you get this? Because when I use this, if you notice where I put it, this thing is to give you the price, 1.3393. All right. This is to give you the risk. The risk is below this. So this gives you the risk, 1.3354. Okay. And exit point I gave you. So this gives away everything. And so anytime you see this thing and I send it on a chart, that's to tell you where I am looking at you entering. Okay, it has to be above a certain line. Now, the strategy says you close of the candle. So this may not be the close, but this is telling you I'm entering above. So I can put it anywhere, but the strategy already tells you is the close of the candle. So sometimes the candle can close lower or close above, but it's the close of the candle you're entering. But the risk is firm. And the reward is also what? Based on your entry. If you enter and your reward is your entry, your risk is 50 pips, it means your first exit is 50 pips. You see that part of you that has to now manage this idea because it's an idea, is a trade idea. Okay. For you to, I've given you the concept of entry. Now I've told you, oh, this is where we're going to buy. There's a part of you that have to apply the rest. Except you are saying something, you can unmute yourself and let me understand. Say, no, remember how you explained the price action that gave us to take a trade with longer risk and shorter reward. It seems it's something else you're saying, Mr. Cabin. Because you even mentioned Fibonacci, and I'm asking, where is it coming from? What do you need Fibonacci for? Do I have any strategy that I'm teaching you that I'm using Fibonacci? That Fibonacci is a characteristic of the strategy. Hmm? Let me tell you guys this. All right. Reduce, make learnings. Even if I'm showing you sometimes, for the purpose of training, I want to tell you some certain things in the market. I would use certain analogies, but they are not the basics for the strategy. I'll teach you the basics first. You understand the basics. I use Fibonacci for my confirmation when I want to trade. But if I want to show you certain things, oh, when this market comes to this level, because it is this level right now, this is 50%, it gives me two things. I'm very, very important. I'm very, very particular in the market. Is market on discount or is it on premium? That is my powerhouse. If market is on discount, I'm tilted towards looking for what? Is it on point of interest? Has it gotten to the low discount? And I'm waiting for two things. That a rate of that discount, okay, and a bullish market structure to establish. When that established, I'm looking for a trade. I don't need Fibonacci for that. Most times, when market is sinking and stuck in a certain place, I will look at the major range. I can take Fibonacci to see where it is. If the market is hanging, I'll say, oh, this is on 50%. Now, probably there might be retracement, probably when I find, okay. But I will still, at the end of the day, what is my strategy of entry? Is either the market changes character or it breaks structure. That break or structure or change of character, that's the only thing that I pay attention to. So don't use the knowledge, extra knowledge that I have that I'm using to show you learning. It is not a strategy. Focus on the strategy, break or structure or price action. Focus on that. You don't need Fibonacci for that. Except you want to now learn how to use Fibonacci to reinforce. Like you asked yesterday, break retest for snipe. And I was telling you yesterday, you don't need break and retest for snipe. You can use break and retest for, except you now want to make it your own strategy. All right. You cannot go on that journey. But I would advise you have so much in your hands to make trading very easy. Reduce the noise. ICMC, SMC, order block, breaker block. Just capture it like this, tie it, and throw it into the sea. Okay? You find better execution, better risk, and better management is very, very key. You can go into those things later when you begin to, you will form strategy. I see, everything I'm teaching you guys right now, they didn't teach me. They taught me concept. I understood. There's a training on my YouTube. If you guys go back 6 years, go type psychology of the market. I think I have several videos on psychology of the market. Okay. It's about 6 years ago. The concept of price action. That's where I started my journey, price action. Then 2 years ago, I bumped into the concept of market structure, and it changed my game. Okay. And if you also go, I think if you type on my YouTube market structure, you find some videos. If you now want to absorb, if you think you are knowledge drunk, you want to be drunk, you understand? You want to be drunk with information. Okay, you can go kill yourself. I got a lot of them. I will load you with knowledge. But what I'm doing on marketing side with you is one of the best things you can ever experience as a trader. Kill the noise, understand an execution point, all right? And guard your entry with a strategy. And that's what I'm helping you do. I'm protecting all of the knowledge you've gained and now instrument it into a trading strategy for you. If you feel it is not enough for you, you can every knowledge question. And I even have a strategy. I have a strategy on trend trend Fibs price action, TFP strategy. Just go type, okay, trend Fib price action, right? Yeah, I have it in my YouTube. Over 70% win ratio. I have a strategy, the concept strategy, over 70% win ratio. Price action, market structure shift. I have lots of them. Okay. If you want, and that's just a piece of the icing. There is more in here. You know, the left side of the brain has more value. I'm just giving you what's on the right side. Any question on the chat? Has it been a beautiful week? Any question? What are you going to do better next week? Type it on chat. So what are you going to do better next week? So if you do not have a leverage account, have a leverage account. Okay, get one leverage. Today is 13th. I think 10 trade promo ends today, 20% promo. Many of you did not take advantage of it. Okay, use that to get a leverage account. As little as, I think the 10K live account. See, it doesn't even have to be a live account. Get a valuation account. Many of you should have 100,000 evaluation, 90,000 evaluation account. How much is the 90,000 account? You can do that and put that. You're using that account to copy my trades. Many of you are not investing in your confidence. Okay. You don't have to get a live account. Get the 90K evaluation or 30K evaluation. The promo is ending today, 20%. You can get two of that and say, oh, I'm following gold and I'm following this thing with Camry. You can just be making money. Okay. I'm using my personal for leverage account. Okay, you're using, so you're leveraging me and also taking your trade with same account. But that's not the way to do it anyway. But if it's been working for you, right, but it means you're not documenting your own trade, because why? You cannot document my trades and your trades. It means the end of the day, you don't have a decision in that account. If I am involved, it's not your decision. Then if you're involved, we're both involved in that. How can you document me and you? All right. Except you are doing analog. So you're writing my own out and you're writing your own. So at the end of the day, you see, which is also possible. Okay. I grew this week a lot. I no longer chase trades. I wait for my setup patiently. So far this month, I'm experiencing good changes as a person. I'm on mission to become happy. Okay, I'm happy with the outcome so far. These trainings are 100% effective. Okay, good. I believe my funded account, 3K traded account, under 1 hour of our leverage. I didn't know there was drawdown limit. Welcome to the club. Follow my 30-day plan, action plan. All right, beautiful. So many of you take this weekend, go back into the training that I did this week from Monday. First, like I told you, anytime you experience a training, 20 minutes after the training, 70% of your exposure is lost. So one of the things you have to do is remind yourself with every training when you rewatch it and you look at the goals you set after every training. Always have an action point after every training. This is what I'm going to do. And you look, when you watch, you look, did you do what you said you was going to do the next day? All right. It means you're going to begin to align with your conscience. If your conscience begins to favor you, you get better as a person. I've got 3 separate evaluation accounts for strategy with Bitcoin, GJ, and NAS. So I use my personal account going forward and leverage your trades. Okay. Yeah. All right, so we'll rewatch these videos, check on your decisions, because every time you reinforce your decisions, you become better. Now, as much as I'm giving myself out, it's limited. These sessions you guys are experiencing right now is coming to a close. I hope you guys know that. So part of what I said yesterday that you guys, I said there was one of it that I did not say that like. All right. In the project we are launching, there's one that I said like. Okay, so I'm a practical person. I know you guys have been enjoying what I'm doing. All right. But there was a timeline for what I was doing. So, but this is the good news. Market Insight is a live session. So the blueprint to what we are launching first is to consolidate people earning before they learn. So we are fast tracking the need to earn before they learn. That's why you see I've been pouring out so that you guys can understand how to leverage earning while learning. So the while learning, all right, is going to come in the live session. So I am not launching Market Insight first as a live session. I want to focus on people leveraging to earn. So we're going to have our Market Insight ideas and signals, okay, to reinforce leveraging earning. I want people to start earning simply. That is why, okay, you fund an account, you understand the insight. So we're going to have videos and training on insight, but it's going to not be a package. So in the community, everybody get access for free. So we're going to reinforce how to leverage our signals and insights so people know how to earn first. Okay, then we're now going to have live HFX. So this is the good thing. HFX Pack is going to be the only pack that comes with live session. But what I am doing, okay, for this probably first 2 months, I'm going to infuse live insight, market insight with the HFX session. So the HFX live pack is going to give you both trading HFX, but I'm also going to now do, so for those of you who don't want to miss my live insight, have to get the HFX because that is the only time I'm going to do market insight and share trade ideas and probably train like what we've been doing. So it's going to be temporarily infused with the HFX live pack. All right. But everything, the courses, the videos, the strategies, they're all going to be in the signal pack. All right. So I don't like to call it signals, but call it market insight. I'm used to market insight, trade ideas. Okay. So do you guys understand? Put 100 on the chat. So one of the things you do, if you have an opportunity, archive my YouTube and start sucking everything you can suck right now. So I don't miss. I want you guys to start growing account. I want this community to start making withdrawals. Okay. I've taught you what you need to learn. Now it's time to make money. All right, start making your next form of mistakes. Fund account, open yourself. Many of you are scared of making money because if anytime you're not invest, don't be too afraid to lose. Okay, you have too much knowledge, evaporate. All right, because the same time, let me be very honest, factual. Some of you are careful starting small. So you're starting with small accounts and you are trying to see if you are good at growing it. While that is good, but let me tell you the other side, you're scared. There's something about success. Success is practical. You have to be willing to take risk. Okay, like I said, if I'm trading an evaluation process or I'm in a funded process, I'm on negative, I go fund another account. I replace the negativity with another. The moment I go past 3% drawdown, I fund another account. Because why? I don't want to get myself in that emotion. I'm trying to bring the account back. No. Rather, I replace a new one and I focus the energy on that new one and growth. I guess so that one either comes back or it goes. That is our resolve. I'm not scared. I would always win because I am not scared. Okay. And I'm willing to fund my belief. You can't believe and you are scared. It's impossible. It cannot work. So if you believe in what you have learned, you believe that this is going to work for you, fund your belief. And how practical it is yes, it's okay to start small. That's why I said it's okay to start. Do not be willing to gain what you cannot afford to lose. All right, that's a practical term. But part of growth is exposure. Some people, if two students come into an environment, I won't start with a 100K practice account, I won't start with 1,000 practice account, they are not the same. They will never get the same result. True or true? It's the same thing you're learning, but one has shifted to start high because the truth is we will both lose. That's true. If we both lose, I lose 100K. If you lose, you just lose 1K. But if we both win, we're not at the same pace. And you see, it's not about the figure, it's the attempt. Okay. So many people are not willing because of how much they've lost so much. They are not willing. It means I'm always on this mental side. Okay. I'm always checking why I'm doing what I am doing. What is inspired? Am I afraid? Okay. If it is not fear, that's beautiful. You can stick to it. But if there is a layer of fear, you would get the result of your fear because fear is an emotion. All right, fear is an emotion. So many people, because of what has happened to them, they are tactically careful. Not because careful is the order of the day, but because of what has happened to them. Don't allow your past rewrite your present, okay, your future. Don't allow your negative past rewrite your future, but rather, how much account would you rather want to trade? Okay, the journey to $100,000 account, how are you breaking it down? All right, you break it down with precision. Let it desire to own huge account. So this prop firm right now, the prop firm phase, that's why I say get evaluation, because evaluation can, rather than buy live account, you can get an evaluation for same amount. I think with Blessed, you didn't tell how much again is so with I think about 300 and something, I believe 400 and something thousand dollars. Only 20%, I think it's going to be less, maybe 200 and something. You can get a 90K account or a 30K, sorry, a 30K account. Okay, and you go through the phase of evaluation. Or you can decide to go get what? A $10,000 account. Okay. My idea is push yourself, risk, trust in failing as well as you trust in winning. One is going to happen. When you fail big. And when you win big. It's a choice. All right. But don't allow a negative emotion trap you in trying to win small. I heard one of these trading influencers said something. I said, well, so far, so good. You have said a lot of things, but what you said made sense. Okay. Say if you're in journey of your trading 2 years now, you have not gotten the grip of trading 5 figures, 2 years. You are not a trader. Okay. Because why? There is no excuse more now like before. In 2 years, if you've been in this game for 2 years, you should be trading 5 figures. 5 figures, yeah. It means you should be trading 100K. Whether evaluation or live, it should be. Okay. If you don't have capital, leverage capital, but use the skill to leverage capital. But when you're using the skill, be confirmed that you're doing the skill right. If you're not, don't trade. But if you know you got it right, then after you have gotten the skill right, you know how to enter, you know your risk, the next thing to do is account management. You don't have to learn more. The moment you know, so many of you already know the snipe strategy, but most importantly, you already have access to my ideas. The next thing you should do now is not learning more. You already know the strategy. What are you trying to learn more? When you're thinking to learn more, you're confusing yourself. You are supposed to be practicing more, not learning more. And practicing for mastery is with account. It's not more piling up more knowledge. It's just see what you've learned. Let it reflect in an account. So account management reflects your learning. So go get that account. You can start with a 50K evaluation, start with a 100K evaluation. Okay. Because the higher the evaluation, the higher the return and the higher the loss. Okay. So you need to lose big to win big, or you lose small to win small. So the choice is yours. All right. But one thing, the reason I'm saying all of this, let your choice to win small not be based on what has happened to you. Let that choice be based on your plan, not what it. So if you're trading with a small account and you have the money to buy a bigger account, I need you to sit yourself down tonight and ask yourself, why am I trading with a small account if I have the money to buy a big account? And if tell yourself the truth, if the answer is more of you are scared of losing it, go buy that big account. Because the truth is, I'll tell you, you will lose it. You better lose it quickly and get over it. Lose it quickly, but it will be painful to eventually lose it after 6 months. I'm being practical with you right now. Many of you don't like what I'm saying, but you will lose it eventually. If the reason you planned your discipline was bettered from fear, you will lose that plan. It will not work if it was bettered from fear. My decisions are based on my convictions, not my fears. So, and guess what? Time is your asset. If you make a plan that will fail in 6 months, you have lost 6 months and you also lost plan. So you will lose eventually, but you would have lost time in the process. That is why I'm telling you this. If you're convinced about the strategy and you want to win, go in big. Guess what? You may lose, but at the same time, you may win. But let the outcome be fast. Because if you lose and you have a win not to stop, you get over again. All right. So plan. That's why I gave you guys a blueprint for 2026. If you have $1,000, break it into 10 places. Start beginning to what? Get evaluation, or break it into 5, get evaluation account. So that is how I break the plan. I didn't say if you have money, I say if you have this amount of money. Okay. So I have a plan for this amount of money. So break it. So if some of you have $1,000, some of you have 3,000, some of you have $5,000. Okay. Break it. You can get a 200K evaluation account. You can get a 300K. There's a 500K evaluation account. Who say you can't get it? If you have the money, get it. But if you don't have the money, look at what you have. Apportion it. Let that be the reason you are trading. Let your capital be the reason you are trading the type of account you are trading, not your fear. Are you guys with me? Is it clear now what I'm trying to say? Not your fear. Let your capital. So if you have the capital, you're planning to break it down. It's okay. I want to start practicing with 10K because 10K is a portion of my, not that you have $3,000. I said, okay, let me start with 200. Take your time. All right. So any question? Say 90K is currently 351. Imagine. So almost 100K is $351. Come on. That's amazing. That's amazing. You guys should have sizable accounts. You guys should be trading. When you see your your return. You know, bear in mind you pass that account. Even if it takes you 3 months, you pass that account. That's $351. If it takes you 3 months to pass that account, and you now get to a level you're doing 10%, then we say on 90K is $9,000. You get probably about $6,700, $6,300, $6,700. You can see the investment in 3 months, 3 to 4 months. Go big or just go home. I know you're at home, but just go home from your home. Go big. If you have the capacity, go big, right? Your losses will be big, but your wins are promised to be big as well. So choose, okay? But someone will say, oh, I have $351, or I have about $500, but the person is just trading with a 3K account. There's no wisdom in that, that's truth, all right? That's fear. Evaluation account in itself is already a risk. It's not your money. So why go in afraid? The odds are already set against you. Trading odds are set against you. Learning odds are set against you. You have odds against yourself. Okay? Now, account odds are set against you and you're still trying to be careful. Will you win? You can't win. That's the truth. Okay? It's like you are in a... No, let me not even go there. Is there any question for me? It's been a beautiful week. All right? Next week is going to be better. All right? I've given you guys the instructions for... it's like a statement that says everybody's trying to be careful. There's that statement. We're all gonna die. You cannot be so live. Stop trying not to die. Pay attention to living because we're all gonna die. Okay. So stop being careful, not just take our time to live. Live healthy, eat healthy, focus on good living, be valuable to people, experience everything you need to experience, because at the end of the day, all right, if it's this, okay, well, maybe we can say we're all not really going to die now, because some people are just going to transcend, okay, because of the timing we're in. But we're talking about life without spirituality. The body is meant to die, so live this body life, the same way. It's the same meaning I'm also that if you want to risk. We're all going to lose. You will lose. I'm losing. So take your risk. No one wants to die, but everyone wants. What are the instructions again? Go back, watch the videos. Watch the videos. Look at your plan. For every video or training you watch, there has to be an action point. Like this training I gave you right now. What is your action point? You wrote it down. For the last training, you wrote it down. When you watch the video again, come back to your action point. Did you do what you said you was going to do? For every time you watch, your conscience will be involved. So begin to write your action point and you check back on your action point. I said I was going to do this. Did I do that? So watch every training that I've done in the course of this week, this weekend. All right. And write out your action point. Write out the things you did. Be more accountable. All right. This group is meant for accountability. Many of you just show up for classes. You just want posts, but you're not accountable. God is watching you. Okay. With that being said, ladies and gentlemen, I want you guys to do something for us. Okay. I need you guys to go in take a picture of what has happened in the group, go to Instagram, tag. It's been a beautiful, share something about the week and tag me. I am Kenry. All right. Tag me. Share your experience about the week. Okay. And tag me. Don't collaborate me. Don't mention me. I said tag. So when you post in your timeline, go to the option of tag and add and tag. So when you tag me, I will see it and I will reshare it. This is to show that things are happening. Just putting out the right energy. And make sure you share your experience in the course of this. What is that reasonable thing that you did this week? What is that milestone that you hit? What did you get? What are your take-up points from all of the training, all of the experiences this week? Share it in the group, okay? And from there, other people are going to take